Welcome everybody to Bitcoin, Kick to the Groin. For those of you that are just here to see what Turbo Trading is about, welcome. Of course, all our members, glad to have you on board. I want to talk about where I think Bitcoin is going to go and why I think it's going to go in that direction. So just a couple of things though before we do get started on this. One is our disclaimer. This information is strictly my opinion. It's editorial. I'm not recommending a position one way or the other. I am short some of the Bitcoin stocks, but please read our disclaimer that we have printed here, as well as you can see our full disclaimer on our website at TurboTrading.biz/disclaimer. It's important that you read these documents, both here on the screen as well as our disclaimer on our website. So first off, I want to talk about what is Bitcoin to get a clear understanding of why I'm going to take the position I'm going to take. And I mean, there's a lot of cryptocurrencies out there, altcoins, they're, quite typically called. And to understand the basis behind Bitcoin, I think will give or helps to give a better understanding of the price movement. So Bitcoin, of course, is a type of cryptocurrency. It was created in 2009. Nobody really knows who the author is. The name Satoshi Nakamoto is the pseudonym that has been used and bandied around, but nobody really knows who that is. And for a number of reasons for those people, their own security, maybe protection from government, protection from the nefarious side of the business, maybe they have whatever reason they have. Nobody really knows who it is. But the key about Bitcoin is that it's operated by a decentralized authority. So there's no government in place. There's no one person that controls what happens to Bitcoin. It's a broad decentralized authority. Also, as we know, there is no physical Bitcoin, though you see pictures of it on the internet, a gold coin with the B signature in it, much like a euro. But there is no physical Bitcoin. It's only kept on the balance of a public ledger, and that's in the blockchain. But Bitcoin is not issued or backed by any government. El Salvador did recently make it a legal tender in their country, but that's really an anomaly compared to the rest of the world. But it's not backed by any government. There is no assets that would back Bitcoin. And as I was saying, it's not legal tender in most countries. As a matter of fact, a lot of countries are trying to ban Bitcoin at the moment. But because of its popularity, Bitcoin has triggered the launch of hundreds. I think there's 7,000 other types of cryptocurrencies out there now. And this is collectively referred to as altcoins. But the Bitcoin is the largest cryptocurrency by market capitalization. Currently has, the current value is about 700 billion. It was over a trillion, 1.2 trillion at the height when it was trading at 60,000. But still 62% of the total cryptocurrency market is the Bitcoin. Bitcoins are created and distributed, traded, and they're stored with the use of a decentralized ledger system known as blockchain. The Bitcoin system is a collection of computers, they're also called nodes or miners, and they all run the Bitcoin's code and store everything on these blockchains. All of the computers running the blockchain have the same list of blockchain and transactions, and can transparently be seen Yeah, I can see these new blocks being filled with new Bitcoin transaction. So it becomes virtually impossible to cheat the system, and that's one of the what the proponents claim of Bitcoin is so good, is that it's very secure and it's impossible to cheat the system. But what is blockchain? Well, blockchain is just a specific type of database, and it's different from typical databases in the way it stores the information. Blockchains store data in blocks, and then those blocks are all chained together in chronological order. So as new data comes into the computers, it fills up a fresh block, and then once that block is filled with data, it's chained to the previous block behind it, as I said, in a chronological order. There is a lot of different types of information that can be stored on blockchains, and it is becoming a very popular medium for storage, not just for cryptocurrencies, but a lot of other other information has started to embrace this blockchain technology and use it for different applications, and not just for cryptocurrencies. So, but its most common use though is so far is for ledgers for transactions, and that's why it's important for the Bitcoin. So blockchain is used in Bitcoin in a decentralized way, so that no single person or group has control. So it's a collective, right? It's the users are collectively retain control. Now there's some benefits to this, but there's also some detractions to this. Decentralized blockchains are immutable. This means that once the data is entered, it's irreversible. So any transaction that is done for Bitcoin is permanently recorded, and it's viewable to anyone. But the detraction is that if there's a mistake between the parties, there's no middleman to adjudicate the mistake. You have to rely on the recipient to send back whatever they got to the original owner. So you have to be very careful, and there is no middleman, there's no insurance, there's no bank or no government that protects this. Once a trade is done, that's it. It's irreversible. And this is how the process works. This is from Investopedia. Once you have a new transaction is entered, the transaction is then transmitted to a network of the peer-to-peer computers scattered across the world. These are the nodes. The network of these computers solves an equation to confirm the validity of the transaction. And then once it's confirmed, the transaction is clustered into blocks. And once these blocks are filled, then the blocks are chained together to create a long history of all the transactions. And those transactions are permanent. And then the transaction is completed. So there's some advantages and disadvantages to Bitcoin, to blockchain, and vis-a-vis Bitcoin. It proves the accuracy by removing human involvement or verification. So it's all done by algorithms and the blockchain codes. So there's a cost reduction by eliminating third-party verification. There is a small fee that is charged, per transaction, but compared to if you have to put it through a third party, it's minimal. It's decentralized, so it makes it much harder to tamper with. There's all of these various computers. The only way somebody could do this is if they could take control of 51% of the computers in the system. And you can imagine the cost of doing that. So it's the cost of trying to tamper with the blockchain is far more expensive than perhaps what you could get from one transaction that trying to steal the money. So it's very hard to tamper. And the transactions are secure, they're private, and they're efficient. And the technology is transparent. And this also, one of the other things that this does, and I think people miss this as well, is it provides a banking alternative and a way to secure personal information for citizens of countries with, unstable or underdeveloped governments. And of course, this is one of the big cons. The other side of that is why governments don't want it, is because, especially unstable or underdeveloped governments, is that people can use it to circumvent government regulations, perhaps corrupt regulations that governments might have. So on the other side, the flip side of that, you do have significant technology costs associated with mining the Bitcoins. And it continues to get more and more expensive because as it gets mined, the creators of the Bitcoin get paid in Bitcoin. But as more and more get mined, the number of Bitcoins that you receive from mining is halved. And so it continues to get more expensive the more you mine. In the sense, well, you get paid less, but it also is more expensive as the technology cost associated with trying to figure out the next code becomes more difficult. Bitcoin also, this blockchain has low transactions per second, the Bitcoin, so it's a bit cumbersome. Bitcoin also has a history of illicit activities, where for ransomware is placed in computers. The dark side wants to get paid. The criminal's activity on it wants to get paid in Bitcoin. There's money laundering, ransomware, blackmail, anything, tax evasion. There's a lot of activity that can be done under the radar using Bitcoin, illicit and nefarious type actions. And one of the other things that's coming with Bitcoin is going to be the regulations. There's going to be new regulations that get piled onto Bitcoin, which will have a negative effect. And then I think one of the other big ones, and this was pointed out by Elon Musk, or he was brought to the forefront by Elon Musk. Everybody knew it beforehand, but he really brought it to the forefront, and that there's significant environmental cost associated with mining, Bitcoin mining. You can use, I think it's all of the electricity used in one day in Luxembourg, in Europe, is equivalent to the Bitcoin mining around the world. So here's the risk associated with Bitcoin investing. You've got the regulatory risk, you have security risk, you have insurance risk, fraud risk, market risk, and environmental risk. Regulatory risk, this is a big one, and this has already started to scare a lot of investors away, especially those investors that wanted anonymity and to use it for nefarious purposes or black market purposes. One thing governments are very jealous about is their currency, their money. So Bitcoin is trying to rival the government currency and trying to replace currency. Governments don't like that, and so because they lose control. And so for a number of reasons, they want to control monetary policy, they want to control circulation, and they want to control the valuation. And if there's another currency floating around out there that they don't have control of, that makes them very nervous. So in such, they will bring in regulations that either that regulate Bitcoin, restrict Bitcoin, or even ban the use and sale of Bitcoin. And we've seen that in China is probably the leader in that sector right now, as far as trying to come down on Bitcoin. The U.S. government has just recently, I'm not sure if they've invoked it yet or they're talking about it, involving any transaction over 10,000 or more. It has to be recorded and reported. The and one of the things behind this is the use of this on the black markets, money laundering, illegal activities, tax evasion. These are all, and rightly so, these are all activities that governments want to protect their citizens against. I mean, that's what governments are for. And so, there'll be regulations to come in to try to stop this type of illegal activity. And then one of the things that's happened in the United States as well is the Bitcoin dealers in many states now need know your client compliance. So that puts another layer of regulation and doesn't make it anonymous anymore. People will have to disclose what their positions are. So there's a lack of uniform regulations about Bitcoins and all the other virtual currencies. So this really raises questions over their longevity, liquidity, and universality. Security risk. This will keep a lot of people out of the market on Bitcoin, and the more times it occurs, the less likely people are going to venture into this market. So most of the owners of Bitcoin, they've bought their coins. They've converted their currency, their world currency, USD, yen, euro, whatever the case may be, into Bitcoin. And Bitcoin exchanges are entirely digital. And anything that's digital like this any virtual system has risk from hackers, malware, and operational glitches. And there's been numerous cases of this, and the big one being the Mt. Gox exchange that got hacked, and all the millions of dollars worth of Bitcoin were stolen or lost. So that is a big negative for owners of Bitcoin. What's the safety of where you're storing your Bitcoin? Now you can store your Bitcoins on your own computer or on your own disk or whatever the case may be, but thieves may steal the hard drives or your personal keys and be able to get in there. So I suppose it's like having your money in the bank, except the money in the bank it is secure, but the money in the bank is protected by government. If somebody steals your hard drive or your personal key, there's no recourse for you. And once a transaction is done, it's irreversible. The other thing is owners may forget or lose their digital keys, or they may die, and nobody knows how to access those Bitcoins that are stored there. And as I said, this is particularly problematic because all Bitcoin transactions are permanent and irreversible. So there's no potential to get it back if somebody takes it. And there's no source of protection or appeal if there is a problem. You don't. Who do you go to? Who do you call? Surely not Bitcoin busters, Ghostbusters. You do have insurance risk, which I just briefly touched on. In the United States, you have the SIPC and the FDIC, which insures certain investments in brokerage accounts as well as money in the banks up to a certain limit. In the United States, in the world, the U.S. Treasury bills are deemed to be the safest investment in the world because it's backed by the U.S. government. And, the SIPC and the FDIC, those are backed by the federal government. So you have significant funds available in case there was ever a disaster. Bitcoin exchanges and Bitcoin accounts, they're not insured by anybody. There's no type of federal or governmental program that can protect you. So there's a lot of insurance risk involved in this, and this will keep people out of the market. There's fraud risk, but there's fraud risk in everything. I mean, many Bitcoin Ponzi schemes, people selling Bitcoin or false Bitcoins and this kind of thing, maybe tricking people to getting their Bitcoin. And there's many cases of Bitcoin price manipulation that's been documented. So this is once bitten, twice shy, type mental attitude for people to not to invest in Bitcoin. I suppose one of the other biggest ones is the market risk. Bitcoin value. Now, a Bitcoin is worth a Bitcoin, so it's only worth one Bitcoin is only worth one Bitcoin. It's what you can buy with that Bitcoin. So Bitcoin's valued in typically is valued in USD, but it's valued in euro, yen, all the major world currencies, Swiss francs, all the Japanese yen, Chinese renminbi. So there's a lot of wild price fluctuations, which we've seen. I mean, Bitcoin was trading, when it started at pennies or less than a penny, traded up to 62,000, dropped 50% in a day, in a week to 40,000, then down to 30. I mean, huge market risk to owning Bitcoin, wild price fluctuations. These are large swings in value over very short periods of time. The price of Bitcoin at these levels is very sensitive to newsworthy events. For example, Elon Musk tweeted that Tesla had bought 1.5 billion in Bitcoin. The market went crazy. Then he tweeted and said, I'm going to accept Bitcoin as payment. Then I'm not going to. Then we got sensitive news that transactions over 10,000 were going to be tracked and needed to be reported, and that had a huge negative impact on the market price. Went from 40,000 to 30,000. And so if fewer people begin to accept Bitcoins as currencies, these digital units may lose their value and they could become worthless. And then for Bitcoin itself, there's plenty of competition from other digital currencies. There's 7,000 of them out there. And if any of these currencies, Altcurrencies, have technological breakthroughs to form a better virtual coin or, less environmentally threatening, then, the shine may start to come off Bitcoin. And Bitcoin is cumbersome. It takes, because it's so decentralized, to change it is an arduous event. It takes time. You have environmental risk. There's going to be a certain subset that isn't going to buy Bitcoin because of its huge carbon footprint. As I said earlier, Bitcoin mining uses enough electricity to supply a small country. In this case, I think they compared it to Luxembourg. So that could stop. We'll call just tongue in cheek, the tree huggers. They're the environmentalists. They're not going to be buying Bitcoin if they're true environmentalists. They're not going to be buying Bitcoin because of the huge carbon footprint. And so those investors may start looking for alternatives that are environmentally cleaner. So let's talk about the value of Bitcoin. And this is kind of an esoteric type discussion, because what's the value of a Bitcoin? Well, the value of a Bitcoin is one Bitcoin, just like one USD is always going to be worth $1. A dollar bill is a dollar bill. The tricky part is how much can that one Bitcoin or that $1 buy? So if you are live in the United States and you have US dollars and you want to travel to Europe and you get there, you need to convert your currency into euros or Swiss francs or pounds if you happen to go to the UK, and you'll get, and it won't be a one-for-one conversion. The value of currency is always changing depending on economic growth and of countries' inflation. There's a lot of parts that go into it to determine the price. So for an instance, 2 months ago, you could, for one Bitcoin, you could buy a high-end Tesla. But today, your one Bitcoin only buys you the entry-level Tesla. So this is going to present a problem for those trying to accept Bitcoin as their currency. It's going to almost be like Germany after the First World War, when they had hyperinflation, or Venezuela where people had to change the price of their goods they were selling, like say bread or vegetables, twice a day, 3 times a day, because the currency was changing so quickly. Well, it's going to be the same for Bitcoin. You're going to need an electronic pricing system on your shelves to show how much 1 Bitcoin is going to buy of a certain item, because the price of Bitcoin fluctuates so much when converted into other currencies. So this brings us to purchasing power parity. And purchasing power parity it's an economic term for measuring the prices at different locations. So it's a macroeconomic analysis to compare productivity and standards of living between countries. Now I'll get around to how this is going to affect Bitcoin in a second. But the PPP is as an economic theory that compares different countries' currencies through a basket of goods. Food, cars, gas, housing, clothing, all these goods, baskets of goods are put into algorithms, and they spit out a number. And that's why we have different purchasing power by different currencies. Sometimes your currency will be worth a lot more and you can buy more goods because you're importing them from other countries, and so their currency is lower, so you can the price is lower, and vice versa. And so it allows a comparison of goods and services in other countries. So the value of a Bitcoin quoted in USD may not have the same purchasing power when you want to spend it in the EU, euros, or in Japan yen, or in London, in the UK in pounds, in Switzerland, the Swissies, Swiss franc, I mean. So the thing about world currencies, they're supported by the country's GDP. And money supply can be added or subtracted based on current economic conditions. So the value of the country's currency vis-a-vis other currencies then will fluctuate based on many factors, such as economic growth, real interest rates, inflation, federal government policies. And they can add or subtract depending on how they want their currency to be reflected. And then the currencies tend to find an equilibrium on these world stages. So the $1 US will always be $1 US, but it's how much you can buy on any given day that's going to fluctuate. So this is the same with Bitcoin. 1 Bitcoin is always going to be worth 1 Bitcoin, but the ability to buy something with it will fluctuate, and depending on which country you want to buy something with it, will fluctuate all the time. And the wilder the fluctuation, the less likely it will be adopted. So Bitcoin itself has no intrinsic value. There's nothing supporting, there's no underlying economic power or asset that backs Bitcoin. It is strictly supply and demand, the price. It's not backed by any assets. It's not backed by any government. There is nothing backing Bitcoin. It is only worth what people are willing to pay for it, supply and demand. Now, we only have 21, so it is a limited supply. There's only 21 million coins available of Bitcoin. Approximately 18.5 million of these have been mined. But there's probably less than that available in circulation right now because people have lost their personal keys or they've died, leaving no access. There's a lot. So the 18.5 probably is not an accurate number. We may never know what that number is, but a lot of it's taken out of circulation. A lot of and these big funds that have bought Bitcoin, and so you buy the ETF. They hold Bitcoin, and that's not in circulation. That Bitcoin is locked up there. So there is limited supply. So if demand for Bitcoin goes up, and you have a limited supply, obviously that's going to drive the price. But it's key to remember that it's only what people are willing to pay for it. There is no underlying value to Bitcoin. Now let's look at this. Let's just do quickly maybe a technical analysis on the price chart of Bitcoin. I got this from finviz.com. It's their chart. Thank you very much. This is a great, as a matter of fact, this is a great charting program that they have, FinViz. It's free. This doesn't go back very far, but this starts at 10,000. I mean, any further back, it really gets nonsensical because it's just that you can't see the lines. What's important here is starting in 2021, Bitcoin really started to surge, got up to around 41,000, pulled back, wedge. This is the front side of the move. And this was a 1, 2, 3, 4, 5-wave move up. 5-wave move pattern. And then we actually got what I would call this 5th wave consolidation in here. Even though it did make a higher high here at 65,000 or so. This is a big 5-wave move, 1, 2, 3, 4, 5. Now maybe we've got a 3-wave corrective here, 1, 2, 3-wave down. And this could be your correction. I doubt it. That's not the way I'd read this chart. I think what you've got here is a massive distribution of Bitcoin. Big head and shoulders pattern. In this area here, everybody was talking about how high Bitcoin could go, 100,000, 200,000, $1 million. The big brokerage firms started, and everybody started issuing ETFs and opening up funds and trading desks for Bitcoin. Usually a sign of, the taxi driver you get in talks about how many Bitcoin he's got, or he's retiring because he bought Bitcoin. Usually a sign of a top of a market. This is a big distribution pattern. Head and shoulders. Here's your left shoulder. Here's your head. Here's your right shoulder. And then you get the government's talking about regulation, and you get one of the things that happened was there was ransomware on the Colonial pipelines, and they had to pay $4.5 million US. They got that money back, so maybe the Bitcoin transaction isn't as secure as the nefarious side of the market thought it was. Now we have this big consolidation pattern, but this is a bear flag in my opinion. This did come down to support. It held support at 30,000 and has gone back up, and it's in a trading range here so bearish under 30, bullish over 40,000. But then it runs into resistance again at 45 and maybe 50. There's a lot of overhead. This is huge distribution. And how this works is when you get up into these levels here, people that bought it at this level, their spouse is going, finally, you can get out of that stuff and get rid of it. Let's get back to reality. And it's the market psychology. If this breaks below 30, it's going to trade down into here, 20, and maybe back to 10. So from a technical analysis point of view, you'll see people on the internet saying that this is the dip buy here, 30. This is its bottomed, time to get long. I don't think so. This is the backside of the move, and when you get the backside of a move, of a huge parabolic move like this, don't forget this came from $3 or $10 or pennies, but even here 10,000 to 60,000. That's a sixfold. That's huge. This is the backside of the move. This is bearish. It's a bear flag. Below 30, it trades the 20 and maybe down to 10. That's where I think it's going to go. And here's the reasons why I think it'll depreciate significantly, and hence kick to the groin. Bitcoin, kick to the groin. There's an economic theory called the greater fool than I am theory. And currently, we know that there's a concentration of ownership of the big portion of Bitcoin, concentration of ownership by a few being the institutions, some of these ETFs, all these kind of things. And certainly they're telling everybody how big Bitcoin is and you should buy it and go, because they need to sell to somebody. It's the greater fool than I am theory. I buy this stock in hopes, or this Bitcoin in hopes that there's somebody stupider than me to buy it at a higher price. A greater fool than I am to buy this off me at a higher price. Eventually, it's like musical chairs. Somebody's left holding the bag. Just let me go back one step here. Oops, sorry. Eventually, somebody's left holding the bag. Whoever bought this at 65, now at 30, or half price at 37, they're thinking, what have I done? The value of their investment is dropped by 50%. There wasn't a greater fool up here. And so he's left holding the bag. That's why we get the term bag holders, because those people. So now maybe they're buying it here. So if you're buying it here on what you think is a dip buy, is there going to be a greater fool than you to buy this off you at 40, 45, 50? And so these are all, there's because there's nothing backing this. It's just supply and demand. You've got to hope, and hope being a great economic theory for investing. You better hope that somebody's going to buy it off you at a higher price. One of the other big reasons this is going to depreciate significantly is government regulations. Transactions are going to be taxed. Governments don't want money moving around that they don't have a handle on, or that they can't get some money out of. Capital gains tax, income, interest, tax on interest, tax on income. Why should Bitcoin be any different in the eyes of the government? They're going to they're going to tax taxable as capital gains. There's two theories on what the tax rate will be for Bitcoin. At the moment, I think it's capital gains though. So governments are going to tax it. They're going to track it. Movement over 10,000, it has to be reported, so there's not going to be any tax evasion. That whole side of the market who thought they could buy Bitcoin to hide their money from governments are coming to the realization that may not be the case, and therefore, they need to find another place to put their money or move it, and that's going to put a lot of pressure on the market. So transactions are going to be more traceable. It's not as anonymous as they thought. I don't know how the government did it, but they got $4.5 million back from that pipeline. The name, sorry, it escapes me at the moment. But the pipeline that got hacked or ransomware, they got that money back somehow. That puts a lot of pressure on the market, and then these criminal activities are reversed. Now they may have got their Bitcoin back, but they may have got it back at a lower price, so they may still have cost them something, but at least they got their money back. So this may not be a place to launder money. This may become more and more difficult to launder money. And I don't know what the percentage of illegal activity is. There's a lot of theories around how much it is. Some of it says around 10%. A lot of that's not going to be available anymore. And then there's another theory where people say that Bitcoin is a store of value. You see it on the internet all the time, how this is a store of value. There is no validity to that theory. You don't see any investor worth his salt putting 10% of his portfolio, committing it to own Bitcoin. Now, some guys have made big bets. Elon Musk put 1.5 billion into Bitcoin, but that's not an investment. That's a bet that Bitcoin is going to go up, and it was a good bet. He hit it for sure, but that's not a store of value. He's not putting 10% of his portfolio into. Well, maybe Elon is. I don't know, but generally, nobody's putting 10% of their portfolio. Mums and pops, seniors looking to retire are putting 10% of their portfolio into Bitcoin. They maybe put 1%. So it's not a store of value. So that's not going to keep the value of Bitcoin up. And then it's too volatile when expressed in convertible currencies. 60,000 to 30,000 in a couple of weeks, 50% haircut. And by the same token, it went from 10 to 60,000, 10,000 to 60,000 in a 1 year period, a six-fold increase. This is too volatile. People are not, people will take bets on this. They'll buy some to loan it, but it's not going to be, it's not going to be a long-term hold for them. The values fluctuate too fast and too often to be a practical alternative to the main currencies. As I said earlier, I mean, what are grocery stores going to do? They're going to have electronic counters on their bread for sale, and when you take it off the shelf, boom, that locks you into that price for your loaf of bread. Maybe there'll be technology that comes to that level. I don't know, but how is he going to accept Bitcoin for Teslas? Is he going to say, okay, today one Bitcoin can buy you our top end Tesla. Oops, tomorrow, sorry, your one Bitcoin can only buy you the entry level Tesla now. I mean, how do you market that? How do you keep that going? The other thing I find, this is true, and this was in the .com in the 2000s, any bubble you see this happen, where everybody's talking about how rich you can get by buying a certain thing. In this case, it's Bitcoin. In the .com, anything, people were changing their company names to end with .com, and they would skyrocket because it was a mania. Tulips in the 1700s in Holland. These are all signals that this is at the top. Anytime you'd get in a tax and he's talking about, hot tip on buying Bitcoin, it's the top of the market. And then I said this earlier as well. It's interestingly enough, at the top of markets, quite often you'll see a front page or the magazine cover of The Economist talking about a certain event in history. The death knell of that event, you always hits the top of the market it always hits the top of the market every time. So we see the big brokers and institutions setting it up for retail clients. Now the big brokers and institutions, they could care less whether Bitcoin goes up or down in relative terms, because they're not, they have a trading desk, and they'll trade it like any other commodity, but they're not holding Bitcoins. They're just setting this up because their clients want to get into it. They don't care one way or the other if oil stocks are going up or gold stocks are going up or whatever the case may be. They just set up the transaction so their clients can participate in. But that also usually is a sign of the top. And there's a ton of competition, 7,800 other altcoins, and that's growing every day. So, and there's new technologies or better technologies that are moving faster than Bitcoin can keep up, because Bitcoin by nature is very cumbersome and difficult to adapt to change, because they need the consensus of all the players, of all the computers to agree to, all the miners to agree to any changes. So I know, Musk has been beating on the drum for Bitcoin to become greener, to make changes that way, but it takes time, and it takes a lot of money. So, there's a lot of competition. There's 7,800 altcoins growing every day. So Bitcoin's 62%, but if it gets down to 50%, this is, or 40%, 30%, this is all money that's going to be taken away from Bitcoin. So there you go. It's a kick in the groin for Bitcoin. I'm short the stock. I'm short the Bitcoin stocks. I think Bitcoin goes back at least to 20,000, probably 10,000 from this level. Anyways, thank you very much for attending this webinar and listening to my rant about cryptocurrencies. Really appreciate it. If you're new to Turbo Trading, come and join us. It's a great place to trade. We always have lots of great ideas and great things going on. Thank you very much.